Are you struggling to recover your losses in the Nigerian stock markets? Do you feel that Nigerian stock market is rigged, or maybe you are actually looking to buy into the right stock, but it's becoming difficult every day because whenever you buy one of the top gainers or whenever you buy a stock that is up, the market crashes. In this video, I'm going to show you how to invest and recover your losses in Nigerian market. So this particular video is based on my research, based on the results of the portfolio that I've reviewed so far and the feedbacks that I've gotten. So here I'm going to share practical insight and idea on how to chart the path to recover your losses in the Nigerian stock market. Very important. Now, why should you follow my guide? The reason is simple. I know what works in the Nigerian market, and I've come to understand the secret to getting in early, the secrets to pick the right stock and turn out profit in the market. So let me show you some of the feedbacks I got in the early trader course. For some of you that are not in our community and are thinking, oh, are you sure this is the right place to be? Let me show you. We had an early trader course in June, we had in October, and then the next batch is in February next year. So here's a feedback. Now you can see I asked them for feedback on what's their how their portfolio had felt so far and the feedbacks and everything. So here you can see UCAP, Veritas, UACN, WAPCO, Total, Unilever, Fidelity, and Owando. Although I responded to this email because we made a lot of money from UCAP. So if you're entering UCAP at 24 naira, UCAP went to 40 naira. So I had to query this part and she cleared me on that. Now, Veritas Capital, we made over 100%, but this is our portfolio. You can see here, she entered at 74 kobo and then exited at 1 naira 30 kobo at 38%. USCN 15.07, exited at 21.68, 44%. Then WAPCO 37.8, and you can see right here, she said she's still holding, she has sold some batch and all that. Total entered at 400, exited at 593, 48%. Unilever at 14 naira. Go and check Unilever today. Unilever is selling for 27 naira, still holding. Fidelity at 9 naira. Fidelity is selling for over 15 naira today. Owando at 12 naira is selling for over 60 something naira, even after touching 80 naira or 90 naira and all that. So you can see here, thank you for the task. It really helped me to keep good record of my stock. This also helped me in tracking my winnings and all that. That's one of the feedbacks. Now, this is the second one again from other participants. I have a lot of them. I can't share everything. Now, you can see this are the list of stocks this person owns. You can see from Veritas, 100%. WAPCO still holding. WAPCO is up. Livestock, 130%. WAPIC, 42. Unilever, Suno Assurance. Suno Assurance has done over 400%. Custodian, Academy Press, Mansard, UACN, Oando, UPDC, ETI. All these stocks have done extremely well in the market. Now, what am I doing? What am I trying to share with you? I know what works in Nigerian market. This is feedback from the people in my community. Now, this is another feedback again. Good morning, okay. Program remains the best I've taken. It gives you so much confidence in your stock trading decision. That's exactly what I impart in my early trader course, not members of my community. I want to build confidence. We do not gamble in the market. We have a strategy that shows us what stocks to buy, and the result has always been very impressive. Now, he said my best pick was Owando. You can see here, he has so much confidence in it. He even disregarded one of my major rules. But please, it's part of the rules I'm going to share when you are recovering from loss. Very important. And then Owando controlled over 40% of his portfolio. And here, you can see he entered at 14. He sold about 70% at average price of 86. That's almost 600%. That stock almost tripled my portfolio. In the Nigerian market, there is a way to trade stock, and that's exactly what I want to show you in this particular video. Now, please, here's a disclaimer. The ideas shared in this video, they are based on my personal research and calculation. Kindly do your due diligence before you invest in this company's stock, or make sure you do your due diligence before you buy whatever stock that I'm going to talk about. Please, the stocks I've shared are not by recommendation. I only showed you the result and the feedbacks from people in my community. Now, please vet my recommendation based on your risk profile. So let me share one of the 4 reasons I decided to drop this video. There was a research carried out, and it was discovered that the average age of capital market investors on CSS platform was over 50 years. That particular information is on Punch. It's on Punch. This is it here. Here. This was when I think on Punch, you can see the title here. Shareholders, or sorry, stakeholders seek increased youth investment in stocks. Youth are not investing in stocks. So, according to Discovery, the average age of capital market investors on CSCS platform, when you buy stock, all your details are on CSCS platform. CSCS is Central Security Clearance System. So everybody's information, as long as you play in Nigerian stock market, is on CSCS platform. So the average age you can see over 50 years. That means the youth are not investing, although there are so many reasons for that. But here's the point. If a significant portion of people investing in the Nigerian market, they are over 50 years, then it means that majority of them have lost money in the market. That's actually the reason I'm doing this video. So here is the point. Now, I said, according to SEC, the average age of active capital market investors on CSCS platform is 50 years. Now, it means young people are investing less. But here's the interesting discovery, which is what I want to discuss in this video. A significant percentage a significant percentage of existing investors who are in their 40s and 50s, because if the average age is 50, then it means we have more of 50s, 40s, and less of 30. Now, it means that a significant part of these people have lost money in the capital markets. That's true, and are yet to recover from shock because of old knowledge. So, if we're talking about people that are yet to recover, that have lost money in the capital market, a significant percentage of them are people in their 40s, 50s. I have reviewed portfolio, and I can tell you categorically that most of the portfolio I reviewed are people in their 40s and 50s, and many of them have lost money. So they are looking for a way to recover from the market. Yes, the younger ones that are coming up have not really had much experience. And majority of the losses in Nigerian market actually came from that 2007, 2008 global market crash. So many of them are still below 18 during that period. So it's actually a significant portion of people who are in their 40s and 50s that are still yet to recover from that loss. But this video is not only applicable to people in their 40s and 50s. If you also find yourself in that situation where you are struggling to recover your losses in the market, then you can also use this principle I shared right here. So in this video, I want you to open your mind to relearn. So if you're in your 40s and 50s and you're struggling to recover, so here, please forget everything you know, because if you know a lot about the market, for me, I'm a result-driven person. I always tell people that if you know this much in the Nigerian market, so why are you not making money with it? Because sometimes people want to come to you, they want to prove that they know, and then they want to start arguing with you or something. Sometimes I just ignore them. Sometimes I don't even respond to such chat and all that. Because the next question I always ask them is, if you know this much about the market, why is it not translating to profit in your portfolio? Because that's the result. If you feel you know, if you feel you can tell which stock to buy or not, then can we see your results? It's as simple as that. That's why I'm a result-driven person. That's why if you watch my videos on my YouTube, they are result-driven. And sometimes I even come to YouTube to share recommendations too, so that when we wait for like 3, 4, 5, 6 months or 1 year, we can go back to the old recommendation. I've shared a lot of stocks on this YouTube channel that have hit 100%, 200% back to back in the market. And the recent one I dropped was NEM on my when I had a webinar with the new members, like who are not in my community, just to teach them how I made the Nigerian market. NEM moved from 8.4 to 10, 11.5 in how many days? Because I know what works in the Nigerian stock market. Now, it doesn't mean that every time I buy stock, they go up, but I can tell you that a significant percentage, or number of my stocks always go up in 3 to 6 months, and then the rest in 6 months to 12 months. I've noticed that in the market. Now, in this video, I want to show you how to open your mind. Leave the knowledge, leave what you have known, leave what you have learned. Sorry, because if what you have learned is working, then the result should reflect in your portfolio. So if you are losing money in the market, this is what you should do. Open your mind, relearn, unlearn, and absorb the new insights that I'm about to share with you right now. Now, you may be older than I do because I'm still in my 30s, but I have discovered a secret after my years of deep research. Yes, I have done deep research into this market from my tunnel level to date. Like, I've lost money, but when I lose money in the Nigerian stock market, I don't give up. I go back to find out why I lost money, how to correct that mistake. Because in every loss, in every event in the Nigerian market, whether it's a loss event or profit event, there will always be a lesson to learn that will help you to improve Because if you make a loss, it helps you avoid a mistake. Then, if you made a profit, it helps you learn what is working. So, either way, there is a lesson. But what a lot of people do is when they lose money, they give up and they say the market is not working. So, here, I want to share from my deep experience, what you should know that can turn your losing portfolio into money making stocks in 6 to 12 months. So if you follow the idea that I'm about to share with you, that losing portfolio you are seeing right here, it will become a money making stock in 6 to 12 months. If you follow the idea I'm about to share with you. Now, here's my warning. It's not going to be easy. That's the truth. I like to be very blunt about it. This is going to be a painful exercise, but the reward is worth the task. After all, the loss that you have recorded in your portfolio, that the loss you're looking at in your portfolio, there's no way you can get the money back. And if care is not taken, you will watch the stock go down, go down, go down, go down, go down, and then eventually you just abandon it. That's why a lot of people have giving up on Nigerian market because they couldn't watch their losses go down, couldn't watch their losses widen every time to the extent that it becomes irrecoverable. A lot of people have even given up. Some have even forgotten that they have shares in the market. Why? Because of the fact that they can't recover. There's no power, there's no hope that they will recover their losses. Yes, there are exceptions to this rule, but if you're struggling, I think this is what you should do. So if you're ready to go on this journey with me, let us get started. So I want to show you this step-by-step guide. This is going to be a practical exercise. This is an exercise. It's not just a training, it's just a teaching. It's an exercise that if you adopt it, it will work for you. So here's the first thing you need to do. What is your investment objective? So open that portfolio or ask yourself this genuine question. Be sincere. What is your investment objective? When I review portfolio, the first question I always ask is, why are you investing in the market? So when I review portfolio, the first question I always ask is, I always like to know investing objective and risk profile. So I ask the question, are you buying these stocks for income? Are you buying for growth? Are you buying for both income and growth? The worst mistake, the wrongest thing I've ever seen people do in Nigerian market is to buy a stock for no reason. Some can't even tell whether they are buying a stock for growth or for investing. And this is extremely important. It's extremely important. When you are buying a stock for growth, the way you behave, your response to market dip is different from when you buy the same stock for income. They are not the same. They are not the same. So it's important you understand that. Are you buying for growth? Are you buying for income or are you buying for both? Now, if you tell me that you are buying for both income and growth, then you need to open two brokerage accounts. You can't use one account to manage stocks you bought for growth and for investing. That doesn't make sense. It will distort your portfolio because when one is down, when your portfolio is down, you'll be worried. You will think you are losing money. But when you separate the accounts, these stocks, you bought it for income. What is income? It means you bought the stock to focus on stable cash flow from dividend payments. So you're not bothered whether the stock is up or down. You plan to hold it for a long time, as long as the company is paying dividends. If a company like Zenith Bank is down today, you're not worried. Why? Because you are only focused on collecting that annual payment, annual cash payout from Zenith Bank. So let's assume that you have stock with Zenith Bank. This is Zenith Bank right here. Now, this is Zenith Bank is selling at 44. And suddenly Zenith Bank crashed from 44 down to 34 or down to 32. Now, will you be worried? No, because Zenith Bank dip is not stopping the company from paying dividends. Rather, your ability to quickly buy more at a lower price gives you opportunity to even collect more dividends in the future. So the way you react to stock dip sometimes depend on your objective. If I had bought any bank for capital growth, let's say I bought any bank for growth here, growth, which focuses on capital gain from share price appreciation. Any dip on Zenith Bank stock will be a problem. Any dip should call for concern because this is how I actually want to make money. I want to make money from share price appreciation. So, but the same share price is going down, then I should be concerned. But if you want to make money from dividends or cash payouts, up and down movement should not be a problem, should not bother you, should not make you restless. because that is not where you're going to make your money from. You're going to make your money from dividend payouts. So what you should be asking yourself is that factor that will help ZM Bank to continue to pay dividend in the future, is it still there? If the answer is yes, then there's no need for there's no cause for concern, alarm, sorry. So what you need to do is to even buy more of the share on dip, because when you buy on dip, you buy more units. When you buy more units, you make more money in the future. So this is why it's extremely important for you to understand your investment objective. Now, in this video, I'll focus on growth, people that are buying for capital appreciation. So if your plan is to buy for capital appreciation and make more money and your share prices are down, then you need to focus on this video, even though income investors can also learn one or two things from this particular part. So first thing is your objective. Why are you in the market? So if you're in the market for income, then it means you're buying a collection of dividend paying stocks. If the price are down, there's no problem. If you're buying for growth, you're buying for capital gain. If the price are down, then you should be worried and find out why the price are down. So part of the things we share right here is to understand reasons why your stocks are down. So you know whether you should be selling them or not. So first one is objective. Second one, fix your emotions. A lot of people, I think this is the number one problem. Before investment objective, this is number one problem. When I review portfolio, the first thing I spot is capital allocation. If you are not allocating capital equally in the stock market, then you have an emotional problem. Your emotion towards the market need to be fixed. So that's why I say fix your emotion by allocating capital equally. Now, capital allocation is one of the underground reasons a lot of investors lose money in the market. And I'll tell you why. They allocate more funds to stocks they love. So when you allocate more funds to stocks you love, thinking it will outperform the rest, and at the end of the day, lose out on the biggest rally in the market. This is the problem. Now, when I see that you have allocated more capital to a stock and less to the other one, it immediately hits me that you need to fix your emotion, because when you allocate more capital to a stock, it means you actually have personal personal like for that stock. And market does not respect your emotion. Whether you like a stock or not does not determine whether the stock will do well. The market does not respect your emotion. This same year that Owando moved from 12 naira, 11 naira to reach a high of 80, 90 naira, I know someone that is regretting now because of this issue. Let me share examples. Now, he he has an exposure of close to 40, 50 million naira in the market. Yes. Now, and he has almost, I think, four stocks or thereabout, four or five stocks. Yes, I think four or five stocks. He said he doesn't want to do many, like, he's a volume trader. Now, he invested a significant amount on few stocks. Example, NASCOM, Dangote Sugar, Dangote Cement, and I think one other one, and Wando. Guess what? He allocated less than 20,000 naira on Wando. Less than 20, a portfolio of 50, less than 20,000 naira on Wando. The rest, the amount, you look at these stocks I mentioned, they are heavy volume stocks. They are NGS 30 stocks. Now, Wando has moved from a price of 9, 10 naira to reach a high of almost 16 naira right now. That increase didn't impact the portfolio. The impact on that portfolio was insignificant. So imagine that he has allocated equal capital of, let's say, 10, 10, 5, 5 each. The dip on the other stocks like NASCON, Dangote Sugar, Dangote Cement would have been reversed, would have been paired by that 900% gain on Owando alone. Owando would have recovered that money and even given him more profits. Why? Because he was too attached. He said, I like Dangote stocks. So he quickly, without knowing whether they are actually a buy at that moment or not. NASCOM. Oh, I bought NASCOM because of the merger with Dangote Sugar. So I was thinking that the share price will rally higher, and it failed. What is happening to NASCOM today? NASCOM is going down. Now, look at each of the stocks. Let's look at it here. Look at Dangote Cement. Let's expand this to monthly. Look at Dangote Cement. Can you see here? Now he's asking, should I sell? Should I buy? But I won't share my feedback because these are information that are only exclusive to people I review their portfolio. So this is Dangote Cement. You see right here. Now look at NASCON. Can you see here? Now look at Dangote Sugar. Can you see here? So they are crashing. I think I one other bank like that. I think it's Chase Bank or so. I don't know. I'm trying to recall. Then Wando. So tell me, if he had allocated equal capital to all these stocks, what would have happened? The portfolio would have recorded massive increase. This Owando alone would have reversed the loss on the other two or other three. What am I saying, SS? You do not know the stocks that will rally. When you are emotionally attached to stocks, you are already failing in the market. You are already a gambler. So you need to stop gambling. It's important. Why do I allocate for capital, equal capital allocation? Because if you have a strategy that you use to pick a stock, and each of the stocks you are picking, they are the result of the same strategy. Why are you not allocating equal capital to them? It's as simple as that. All these stocks that I'm buying today, they are a result of just one single strategy that I follow. Oh, are they benefiting from economic events? Oh, is their fundamentals okay? Are they emerging from the bottom? If the answer is yes to all stocks, allocate equal capital. Because at the end of the day, you do not know the one that will rally higher. So rather, I will just allocate equal capital and I'll be looking at it from a holistic point. So I measure my performance from a general perspective and not from individual stocks. By doing that, it's easier for me to be safe because the one that I least expect, the one that has least capital allocation, might turn out to be the one that will perform. You can see here, it has always happened most of the time. When you allocate capital equally to all your stocks, you are putting your portfolio on the safer side. The market will reward you handsomely. Any stocks that rally higher, you will feel the impact. That's even where the point is coming from. When your stock go up, you will see the impact. The impact is what matters in the markets. The impact, the impact. You don't want to see a stock go up and it's not having significant impact. Then the one that you have allocated more capital to, you are thinking it will go up. And the one you allocated, even if it comes down, that's another thing. What if it comes down? What you are doing is gambling. You are not a trader. You're not an investor. You're a gambler. So if you look at your portfolio today and you're not allocating equal capital, most likely you're a gambler in the market. Sorry to use the word gambler, but that is exactly what you are. Why? Because you are emotionally attached to a stock and you can't tell why you pick the stock or not. Most likely it's out of emotion. See, even if you carry out your analysis, even if you cannot analysis, go and check. Professional traders, professional investors allocate capital equally. That is what they do. And I think this video, this particular part of this section, will help you know how to correct your portfolio. So go check your portfolio right now. If this affects you, then you might have to adopt equal capital allocation so that when your portfolio goes up tomorrow, you will feel the impact. When you're stock, I mean, you will feel the impact on your portfolio. Then the second one is clean your portfolio. Clean your portfolio. Portfolio cleanup is very important. Now, we host monthly webinar, and one of the important part of our monthly webinar is that I share hot sectors to watch and why you should always position your portfolio in this sector. Like the one we had this December, you can see here, this I always share top sectors to watch right now. So I said before you put your hard-earned money in a stock, make sure it's in one or a combination of this. Now, this hot sector changes. At the time we had our December section, this is actually the hottest sector, finance and banking, finance, under finance, you have banking, investment, and insurance. Go and check the market right now. These stocks are going up. Insurance stocks are surging higher. Banking stocks are surging higher. Now, industrial stocks, oil and gas and consumer goods stocks. Under industrial stocks, we have WAPCO there. So in short, in the industrial sector, WAPCO is the only stock I recommended then, and then you see right here. So by doing this, it helps you to clean your portfolio. And I'll tell you why it's important. Now, the reason you need to clean your portfolio is because The reason you need to check for hot stocks, I mean, is because 80 to 90% of stock moves are driven by sector events, not fundamentals. Don't think that it is the fundamentals of your company financial statement that is actually responsible for a bigger move. The bigger move on your stock price is driven by sector events. That is why I'm sure many of us have noticed this. Watch most of the times when a company releases its financials, price might not even move as expected again. Price might even dip and you wonder what happened. I thought the profit after tax, I thought the result went up by 100%, 200%. Why did It's because the rally had been factored in ahead. People that follow sector rotation, they've already spotted it. They've already spotted it. In my early trader course, when I teach them economic events, I show them the secret how to be able to connect your stock to an economic event, how to practically connect your stock, how to know what part of economic event is responsible for the move that your stock is going to record, and how to take that position ahead. So when you see some company declare impressive results, some of us are already in before that result. We don't use financial statement. Financial statement is a laggard. It tells you what happened in the past. How do you project what will happen in the future? Is by following economic events. If today the government announced a major move in oil and gas sector, you will see oil and gas stocks can either go up or down, even when there's no result. When Tinubu announced subsidy removal last year, you see a lot of oil stocks flying up. Why? Sector events, even when there was no financial statement. That's to tell you that 80 to 90% don't move. And when the company started releasing financial statement, go and check. Some of them dropped because the moves have been factored in. If a company releases a result that matches expectation, there's no surprise. What causes stock price to pick up, to rally, is surprise. So when there's a surprise in the market, surprise comes from announcements, news, board management, any breaking news that has to do or that is directly tied to the company's activity, most likely share price will go up. So when you want to clean your portfolio, first thing you need to do is to look at the hottest sector. Hottest sector. Now, when you look at hottest sector, now, this is what I said. The simple way to clean your portfolio is to look at the hottest sector in your portfolio, which is it here. Now, here are the questions you need to ask this yourself. Look at each of the stocks you own in your portfolio, whether they are making money or not. Whether they are making, because sometimes when you have a stock that is making money, it might just be a trap. It might just be a trap. Before you know it will reverse its fortune. So what you do is use these five key elements to clean your portfolio. First one, look at each of the stocks you have. Is the stock in a hot sector? Yes or no? Is the stock in a hot sector? Yes or no? So if you go back to some of this feedback I received here, look at each of these stocks here. They were actually in a hot sector before they moved. They were in a hot sector before they moved. So you see livestock, consumer goods sector, feed prices are going up, farmers are groaning, WAPIC, insurance, Veritas insurance, WAPCO, industrial sector. Industrial sector is hot. It's hot. Why is Dangote cement down? The answer is very simple: supply demand. You need to know the actual time to buy. That's part of the things I teach in my early trader course. Knowing the period. There are stocks that will give you a buy opportunity or a buy window in a week. There are some that will give you a buy window in a month, some 3 months. So knowing the period within which a stock is a buy is very, very important. Look at this Suno Assurance here, 1.3. Insurance sector. Look at what is happening right now to Suno Assurance stock. Can you see here? 1.3 is around this region. Imagine from 1.3 to reach over 5. Insurance sector. Insurance. So when you understand the impact, the power of sector on a stock, you will know what stocks to clean from your portfolio. Now you see Unilever, Custodian, Academic Press, Mansard, USCN, Owando. These stocks were all in a hot sector. They were in a hot sector. They were in a hot sector. That's why their share price rallied higher. That's why their share price rallied higher. So it's important. So whenever you want to clean your portfolio, please make sure they are in a hot sector. Any stock that is not in a hot sector, take it out. Any stock that is not in a hot sector, take it out completely. Now, the next one is fundamentals improving, yes or no? Is fundamentals improving, yes or no? Is it improving? There are stocks you own in your portfolio. The reason they are down is because fundamentals are not improving. So imagine that a stock is not in a hot sector, number one. Number two, fundamentals are not improving. Should you hold the stock? No. Sell off. That's why I said this is a painful exercise. You can't afford to hold a stock that is not in a hot sector. You can't afford to hold a stock that the fundamentals are not improving. If the stock is in a hot sector and fundamentals are not improving, it's a sell. The answer has to be yes and yes. If it's no and yes, yes and no, sell. It has to be in a hot sector and fundamentals has to improve. We are talking about reversing your loss, recovering your loss. That's the idea. So your loss has to be reversed faster. So there is nothing like managing. You have to take this painful exercise, but the reward is worth it. Now, the second part, remember, you're looking at your portfolio. Are there specific news driving the sell-off? So let's assume that your portfolio, you have a stock that is doing well, and the stock is in a hot sector, and fundamentals are improving. Keep. You have another stock. The stock is in a hot sector. Fundamentals are improving, but the share price is going down. What do? You check. Are there specific news that is driving the sell-off? Why is the stock going down? We played this model on UCAP early this year. UCAP was in a hot sector, finance. UCAP was recording increasing growth, recorded increasing growth in revenue, profits, and EPS. Now the question is, why is UCAP going down? Just demand and supply. No major news. There was nothing to explain the dip on UCAP stock. That was a major buy opportunity. So if your stock is in a hot sector, if the fundamentals are improving and the stocks are down and there are no specific news driving that stock, how do you know whether there's a news on the company stock or not? It's very simple. So sometimes I can come here, I'll type UCAP. You can see UCAP Nigeria here, and then I'll click on news. So here I can sort my news by dates to look at most tools. Let's see. Yes, okay, recent. So here are there news on UCAP stock. You can see 23rd of August. UCAP launches UC microfinance. This is a major move for the company. So UCAP consider first ever interim dividend and bonus. You can see here. So these are the news. So the news that I've seen so far are positive. So when you look at it and you can't find any negative news, then it most likely means that the dip is just a result of profit taking, interplay of demand and supply. Very soon, the stock will pick up. Now, there is only one reason people buy a stock. That is if they believe the share price will go up. Whether it's directors dealing, whether it's share buyback program, whether it's institutional purchase, whatever, there is only one reason people buy a stock, and that is if they believe the share price will go up. But there are multiple reasons why people sell a stock. There are many reasons. So it's not every sell-off that actually means that the stock is bad. Number one, you can sell the stock because it's bad, it's not good again. Fundamentals are not okay, fine. You can sell a stock because you need money. You need money. There are times you need money, and the only place you can fall back on is to sell some of your stock. So if an institution need money to finance a major project and they sell off a stock and the stock is crashing, doesn't mean the stock is bad. No. Excuse me. You can sell off a stock to divest, swapping. Oh, I found another stock. Maybe you have made money from the stock. And now the price, you feel that, oh, this profit is sizable. Let me sell off. And why selling off? The stock price is going down. But people are selling off because they're taking profit. It doesn't mean the stock is, but maybe they found another stock that might give them higher return. Swapping. So there are multiple reasons people sell a stock. So it's not every sell off that means Is there every sell-off that actually denotes or means that the stock is bad or things that no, some sell-off are actually going to create buy opportunity in the market. That's the kind of sell-off I'm interested in. I look for sell-off that creates buy opportunity. I look for sell-off that creates buy opportunity in the market. As long as the company is in a hot sector, as long as the fundamentals are down, sorry, are okay, are improving, then no need to panic. Now, is the news significant or temporary? Assuming there is a news, assuming there is a news, okay, this news is actually responsible for this dip. Is it a significant one or is it one that is just temporary? For example, we have a news that is driving Julius Berger stock right now. Here, you can see the Joseph is going to probably pull back. We also have a news that was responsible for the dip on NASCON, right here. That was after that failed merger. You can see these are example of news that can cause share price to crash. Now, this news is major. This news is major because a major part of this move from 40 naira into 70 was driven by the rumor that NASCOM will merge with Dangote Sugar. Now, after that merger was declined, SEC rejected it, the stock started crashing. That was a major news. It was enough for any reasonable person to quickly sell off and leave the market. It was significant. But if the news that is driving the sell-off is around maybe CEO, board changes, and as long as it's not a major person responsible for the growth of that company, maybe just one temporary news, before you know, like this Julebeya issue now, I can tell you categorically that this news is temporary. Before you know, the whole thing will be corrected. It's Nigeria. So if it causes the share price to crash to a lower end of the market, it's actually going to present a buy opportunity in the market. It's going to present a buy opportunity in the market. So let's look at Julius Berger here. Let's look at Julius Berger here. So you go come here, you click on news. You can see here, we'll save 640 billion through termination of Julius Berger contracts. Can you see here? Now, Nigeria will save some by terminating Julius Berger contracts. Yeah, Julius Berger reward long-term service. So here, for me, I think it's just a temporary news. This is Nigeria. Julius would always, there's corruption. It will always find its way to correct the whole thing. Now, if it's going to cause the share price to crash, it's going to create a lot of buy opportunity in the market. So you need to know how to separate news that are significant and news that are temporary. If the news is significant, then you might have to stay off for a while. So even if it's in a hot sector, fundamentals are improving and the news is significant, no, I like to buy a stock that is going down on profit taking because the investors that have bought them earlier, they want to take profit, they need money. It's simple. That's the kind of stock I want to buy. I don't want any news. I prefer no news, like UCAP. There was no news and the stock was crashing. So that was the perfect time to buy the stock. Now, is the stock selling at record key level? This is extremely important. Now, even if there is no news, right? The stock is a hot sector, fundamentals are improving, and everything is intact. Like the feedback from 1 to 4 shows that the stock is okay, nothing is wrong. Is the stock selling at key level? Key level is extremely important. In the market, key level is that region where a stock had reacted in the past. Like if you look at NASCAR right now, this is a major key level right here. If you look at this part again, this is a major key level. Yes. So you see how the stock reacted here in 2013. You can see how the same thing played out again in 2021. So key level, you can see how the stock reacted in this trend line 1, 2, 3, 4, 5. Can you see? So key levels are a region in the market where prices react, where sellers are expected to take over the market or where buyers are expected to take over the market. So on key level, we have the support and resistance. The support is at the bottom, resistance is on the top. So if NASCON is dropping right now, I told them in my community that I'm actually paying attention to these key levels. I'm paying attention to this key level. Let's look at a stock like MTN again. Now, if you look at all that is happening right now, let's go back to this. If you want to clean up your stock, it's MTN in a hot sector. Telecom right now is suffering. Telecom is bleeding right now. Telecom is bleeding because of FX. So, one, telecom is not hot. Number two, is fundamentals improving? MTN fundamentals are not improving, at least for now. Don't try to predict the markets. Don't say, oh, it will improve. Oh, we all use. No. If you are trading, you have to follow the trend. MTN trend says don't buy for now. When it's time to buy, I will alert members of my community. I have a way of watching all these stocks. So I don't just jump into random stocks. Ever since I told them not to buy into MTN, NASCON, MTN has been going down, NASCON has been going down. So for now, it is not in a hot sector because telecom is bleeding. Number two, fundamentals are not improving. And then number three, are there specific news that is driving the sell-off? Yes, there are news that is driving MTN sell-off. Look at this MTN. See, this is look at one on metrics. Just see this news here. Look at it here. MTN Nigerian net forex loss rise to staggering 1.39 trillion. 1.39 trillion. FX loss. So MTN is bleeding. It's bleeding. So what MTN is trying to do, he just finished issuing commercial paper. And I think this is why I think the commercial paper might present another opportunity for MTN to turn its fortune around. Now, if they can use the proceeds of that commercial paper to reduce their dollar denominated liability, all their dollar loans, pay off everything completely, pay off. Now, that will now help MTN to only be exposed to Naira loan. So even if FX is going up, the company is what? Protected. So that's the first smart move. Pay off all your dollar loans, then restructure and carry only Naira denominated loans. So if exchange rate is going up, you are not affected because of what? Uncertainties. Once you do that, and let's assume that the government eventually approves tariff hike for telecom sector, that might actually chart a path to recovery from MTN. Most likely, the next result might be impressive. But for now, I am not buying MTN. I'm watching. Let the trend change. Now, but if you look at MTN stock, you see that MTN stock is actually approaching a major key level. My key level on MTN is between 160 to 170 naira. 160 to 170 naira. So assuming that MTN passes the first checklist, second checklist, third checklist, fourth checklist, is the stock selling at record key level? This is a key level right here that might probably make the stock to bounce up again. If you go back to NASCON to check for NASCON. Here's a major key level for NASCON. Can you see here? Here's a major key level for NASCON. So when you are buying a stock, you need to check for this trend, especially if it's a stock you already own. You want to clean your portfolio. You don't just clean your portfolio by saying, oh, this one is down. Sometimes the one that is down in your portfolio might actually turn out to be the biggest winner tomorrow. So don't rush to sell off the ones that are down. Use this checklist to know which to sell and which to keep. Because at the end of the day, if you follow this, this is actually a major catalyst behind your reversal. If you miss this part of cleanup, you have missed everything. So when you clean up your portfolio that is losing money, use this checklist. So the only stock that you will be keeping in that portfolio are stocks that meet all the checklists. It's in a hot sector, fine. Fundamentals are improving. Oh, there is no news. There's no news. Fine. The stock is actually going up or is at key level. Now, if there's a no news, good. Is this significant? Okay, it's not significant. Now, is the stock trading at major key level? Yes. Now, if it's trading at major key level, then you should buy more of that stock. So if the stock passes all these checklists, if the stock passes all the above tests. So if the stock passes all the above tests and is selling at record P level, buy more. This is what I did on UCAP. When UCAP dipped from 24 down to 16, 17, and it passes all these checklists, I bought more. And suddenly, we saw a U-turn. Now, an emotional trader who doesn't understand the market will quickly sell off UCAP out of fear. Now, UCAP, that was the worst performing in my portfolio, turned out to be one of the best because I didn't rush to sell out of emotion. Rather, I used these checklists to check. And from everything, it was a perfect buy. And I bought more at 16, 17. And the stock went from 16, 17 to reach 40 naira. This is how to clean up your portfolio. This is what I do when I clean portfolio. These are the major checklists I carry out. So if you want me to clean your portfolio, this is exactly how I'm going to clean your portfolio. So the first one we talked about is your investment objective. The second one we talked about is fix your emotion, allocate capital equally. And then the third one is clean your portfolio. Then the final one is swap. All the stocks that did not meet your checklist, all the stocks that don't meet your checklist, swap them. Now, in this exercise, you pick the stocks that failed the test. This is a test. All the stocks that fail this test, you mark them, sell them, and then use the proceeds to buy more of the winning sector stocks that are still emerging from the bottom. That means if you find a stock right here that passes all the checklists and is saying at the bottom, you can see at the end of the day, I say buy more because I know very well that there will be stocks that will fail the checklist. So the loss you are going to incur from the one that failed the checklist, deploy the money on the one that passes all the checklist. That's how to clean up. So use the proceeds to buy more of the winning stocks that are still emerging from the bottom. The simple secret of my consistent winning in Nigerian stock market is that I know how to get in early. So when you buy more of the stocks that is at the bottom of the market, watch your portfolio in 6 to 12 months. You will see it. It's magical. This is what I do. I've seen it play out. Everything you see me share with you right now, they are practical. So if you have a portfolio that is bleeding and it's losing, use this checklist that I shared in this video to clean it up. Anyone that does not meet the checklist, sell off and buy more of the ones that meet all these checklists, especially those ones that are still trading at the bottom that you can see here. Buying at the bottom is very key. That is the secret to getting early. Get in early before others. That is one of the best way to be profitable in the market. Your ability to get in early. This is the edge I have in the Nigerian stock market. I can tell which stock to buy at the early stage before others discover them. I'm already in. Now, I may not do that on all the stocks because liquidity is also important for me. But this alone has helped me to buy into good stocks in the market, stocks that has done well. When I made a call on banking stocks early this year, because I found out that majority of the banking stocks are already at the bottom and about to pick up. This was the call. You can see here. This was where I started calling for bank and making recommendations on banking stocks. Buy UBA, buy this, buy that, buy this. You can see here. For those in our community, they know. FBNH, First Bank stock. I remember very well. We also mentioned that too. So your ability to get in, to know when to get into the market is critical. Even GTB. Knowing when to get in early is important. So when you buy more of those stocks that meet your checklist, especially the ones at the bottom, leave your portfolio for 6 to 12 months. You will see it's magical. You will see what will happen. And eventually, finally, exercise patience. Because the truth is, why the strategy tells you where to put your money. Why the strategy, everything I've shared with you so far, will tell you where to put your money, what stocks to invest in. Without patience, you may not make good money. Patience is the only thing in the stock market that you need to conquer your emotion. Patience in the stock market is your ability to conquer emotion, Ignore market volatility and let the market reward you. When you buy this stock, it's possible that in the following week, they may go down. The portfolio may even go down more. But you know what? You have done your cleanup. Allow the market to do its job. So because you cleaned up today, doesn't mean tomorrow or next week you will see it. No. Even when you go to the doctor for checkup, or doctor is giving a patient drug, do you expect recovery immediately? You will see. Say, give it time. Give it time. You will see. Give it time. So when you clean up your portfolio like this, and you are able to let that portfolio run for the next 6 to 12 months, you will see the results will be massive. Because right now, your confidence level is increased. Why? Because you have positioned yourself to only top performing portfolio, top performing sector, top performing stocks. Being a top performer is not about price. Sometimes tomorrow's winner might be one of the worst losers today. If you see it with your eyes, pick it. That's the way it works. Your ability to see tomorrow's winning stock today is very, very important. So that is all. For you, if you're looking to join our community, I hope everything I've shared so far are insightful. If you want to join our community, you want to catch the next hottest stocks in Nigeria and US market, you can go to glowfolio.com/subscribe. Pick a plan that works for you. We host monthly webinars, share market insights before the media. So one of the things I do in my community is I host monthly webinar back to back. January, February, March, April, May, June, July. This year alone, we hosted 12 months full, no mixing. January, February, March, April, May, June, July, August, September, October, November, December. We just had our last webinar early this month. Our webinar is actually first Sunday of the month. First Sunday of the month, 7 p.m., where I will just show you all the stocks I've recommended so far. And there are new stocks, market insights based on events, CBM policy directions, and all that. So you can go to glowfolio.com/subscribe to pick a plan that works for you. Our subscription plan for Nigerian stocks is 150, for US stock is 200, and then hybrid plan is 300. Now, together with this particular plan, you have access to multiple courses. Stock market for beginner courses, you have access to how dividend to income courses if you're an investor. So there's a lot in the community to learn. We are a knowledge community. I teach, I share a lot of insights. We are not a community where we just say, go and buy, go and buy. No, you see reasons behind my purchase. You are even able to follow my recent recommendations on my platform. And I hope this video is quite insightful. And if this is the first time you're watching my video, kindly hit the subscription button and turn on the notification bell so that when I release important videos like this, you'll be among the first to get notified.